The fact that the S&P 500 is up so much already this year, and especially given, what we've seen with technology, perhaps there's some profit taking, but I think a lot of times it is just rolled forward. I was talking to Chris Murphy over at Susquehanna ahead of Options Insight and ahead of talking to you, and he really describes this one a little bit as a dud in terms of the call options.
Oh, really?
The call options have already been monetized, and the puts that are out there, they're way out in the money. But what's interesting is we talk sometimes about that SKEW index, which is those way out of the money puts. It's way high, and traders hate this index. But over the last 5 years or so, when this index has gone very high, stocks tend to fall off, even crash, but not immediately. Maybe a month, 2 months later, months later. But he was bringing up the SDEX, which is another a put SKEW index, and he likes that one better. And he says that that suggests that there's not so much.
So when you look at a chart like this,
yes,
what's that telling you, though? I mean, what's that telling you about sentiment?
It tells me that based on the way that the SKEW index has been trading over the last 5 to 6 years or so, it tells me that probably in the next 1 to 3 months, we're probably going to see a significant sell-off of some sort, even though that's a wildly unpopular view at this point.
Well, we've discussed this on air before, and you've discussed it in your Options Inside show. It's kind of some of the distortions that we've been seeing in the options market, the idea that people are sort of moving to much shorter dated options, in some cases those 1 day, 0 day, whatever we're calling them options here. Has that created difficulties, I guess, in really determining what is really being priced in?
I don't know if it has, because it's interesting. Everybody was saying that the traditional VIX is broken. Now, the traditional VIX right now is at a 13 handle. The 1 day VIX, it actually is at an 11 handle. So it's not so much. I think that something that to think about is one reason that the VIX is staying low right now, so it's not necessarily the fact that everybody's in these 1 day options, although it sounds as though there is a ton of trading right now in those 1 day options. But a lot of these institutional derivatives guys and women that I talk to, they expect it to not so much be a fad, might not be the right way to put it, but a little bit of a fad. But there's not a lot of correlation. So because there's not so much correlation, the VIX is staying pretty low.
We only have about a minute left.